In this next segment, we're going to go over Chapter 3 exercise or homework. So let's take a look there. I believe this comes to us on page 128 in our textbooks. Yep. Problem 16. Problem 16. All right. So it says Simon Jacobs opened a small tax prep service at the end of its second year of operation. This is what the company had. So we have their trial balance information. They also have some adjusting entries, A through E. And so with all of this information, they want us to do three things. Open the T account. So again, because we're using Excel files, you do not have to open anything. It's already created for you. So let me go back and open that up. So as you can see here, these are the T accounts that are listed here. And here's the adjusted trial balance, the income statement, statement of owner's equity, and the balance sheet. All right. So in this particular problem, so we don't have to do number one. It's already done for us. So we go straight to number two. Determine the adjusting entries and post them directly to the T account. So even though it tells you to do that, to the side, if it will allow you, I want you to go ahead and journalize the adjustments that are listed here. That way you can get an understanding of how it needs to apply to the T accounts. So this first adjustment is office supplies on hand are $319. So if you read chapter 3, you know that the $319 is what's left. And so we did start off with office supplies at $682. So $682 minus the $319, which is what's left, we used up $363 worth of supplies. So the $363 of supplies that is no longer there is what we actually need to record here. Again, this information is in chapter 3. If you read it, you'll know this is what you're supposed to do. So we go over here, and so we're going to say, yeah, it won't let us do it. So what I'm going to do is I'm just going to open up a separate Excel file so you'll see what it looks like. We're going to zoom in a bit. So that first one, which is A, so we have, what's the name of the account? Office supplies, expense, and then office supplies. All right, and so this is our debit, and that is our credit, so you can see it better. All right. So the value is the $363, so that's what's debited there and what's credited there. And again, it's not asking us to do this in this problem, but this is what you should do before you complete the problem so that you know that you are applying the debits and credits correctly, because it's not asking you to journalize the adjustments, but it's asking you to directly post the adjustments to the ledger. And so you don't want to make any mistakes, so that's why I'm doing this. I'm doing the step that they're asking you to skip. Okay, so insurance still expired 180. So what that means is the insurance started out at $520, and they're saying that there's $180 worth of insurance left. So we used up $340 of the prepaid insurance. So we go here, and this would be our B, and we would do insurance expense, $340, then prepaid in insurance. Spelling is horrible. 340. All right, the next one is C, estimate depreciation 870. So we don't have to do any calculations here. They told us what it is supposed to be. So depreciation expense, what was that number again? 870. And accumulated depreciation. That kind of ran over. Spread this out a bit more. Here we go. 870. All right, the next adjustment, telephone expense, $182. The bill was received but not recorded, so I need to record this. So that is going to be telephone expense and because I have not paid it, it creates a telephone payable, something to be paid later. Indent that. And so the value of that is 182. And lastly, we have the services for all unearned tax fees have been performed by the end of the year. Unearned tax fees. So where's the unearned tax fees? 519. So again, if you keep hitting that button, I don't know why. So the $519 worth of unearned tax fees are now earned. So unearned tax fees, and then what do they call it here? Tax fees revenue. Ooh. All right, so that amount is 519. All right, so let's give this some uniformity here. So again, you didn't have to do this, but I think you should do this because this is the step that they have omitted, and you really want to make sure you've done this part right so you can get the other part right. Okay, so let's go into this particular problem. Where's it at? It doesn't have. All right, so we would enter in this information based on the information. So this is what it should look like. So this cell here is just for the word balance, abbreviated word for balance, BAL. And we do want to put in the balances of these accounts. So they gave these the balances here, and so you do need to put those on the ledger. So cash had a balance of 11,265. So that's where that came from. Accounts receivable had a balance of, and so you want to do enter in the values for that. Then after you've done that, you would go in and put in the values for what took place here that I had created. And so office supplies was debited $363. So we find office supplies debited $363. And so that's that there. I'm sorry, was it debited or credited? Office supplies expense. Oh yeah, so the office supplies was credited $365. Office supplies expense was debited. And so we can see that there. So that's how you want to update those records. So once you've put in that information, you want to go to the next requirement, which says, okay, number 3, prepare an adjusted trial balance, the income statement, and a statement of owner's equity and balance sheet now that you've updated the T accounts. So I take the ending balances and I'm able to create the adjusted trial balance. So here's what you do. You update the adjusted trial balance based on the ending balances of what you have now. And so here we can see what it would look like if you've done it correctly. It does tell you no unearned tax fees does not appear on the adjusted trial balance because it now has a zero balance. Because remember, we earned all of the $519, so that's why. So again, we leave all of these cells blank that we're not using. And now that I have the ending balance of my adjusted trial balance, now I take that information to create my financial statements. So remember, the income statement has my revenues and my expenses. So my revenue, I only have one revenue account. I put that there and I list out all my expense accounts and their ending balances. Remember, my total expenses are going to reflect all of those. And then my net income is the difference between all of my revenue and all of my expenses. So revenue minus all expenses, 21,682. Then I create the statement of owner's equity. So Jacob's capital at the beginning of the year was 5,474. We know this because when we look at the unadjusted trial, the trial balance here, that's what it was. You see that? All right. So I put that there. The net income comes from the previous statement. So we have a subtotal. We add those two together. Then we subtract out the withdrawals or the dividends. And so the dividend amount is listed here, the withdrawals, 7,500. So that's listed here, and we subtract that from the 27,000, and this is what we have left for our capital. Then we create the balance sheet. Remember, the balance sheet reflects all of our assets, so we list them all in order, and you can use the order that's listed here in the textbook. Just use that same order. And then their ending balances are coming from, again, the adjusted trial balance that you created. All right, and you can use the information in your textbook to help you complete this. There's illustrations and pictures there that can help guide you through this process. All right, I hope this is helpful in getting you to complete the Chapter 3 homework successfully.